touch base with Prashant Sharma, CIO of Max Life Insurance. He joins us on the show today. Prashant, good to have you. What's the view on the market right now that you're taking from a near-term perspective?
I think markets are looking reasonable to us at this particular point in time. We were concerned about some of the macro issues earlier in the year, but looks like some of these issues are now kind of looking improved. Some of the environment that we were a little worried about, I think on the margin things are improving. The policy environment is looking positive now, and with interest rates expected to come down over the next few months, I think markets could give decent returns. They're probably poised to give pretty decent returns over the next 12 to 24 months. So we are reasonably comfortable with the market levels right now.
Decent returns, are you saying pretty much building on the kind of returns that we saw in 2012?
I would think so. While your index may give about say 15-20% returns, but on a stock specific basis, I think there is a decent amount of momentum in the market. Things are turning around. We are coming out of a 5-year underperformance as far as equity markets are concerned. So all this kind of lays a good base for a decent overall market performance over the next 12 to 24 months. Your index may deliver lesser return, but from a broader market perspective and on a stock specific basis, I think markets can do reasonably well.
Prashant, a lot of active spaces, and just a word with some of the buy side guys over the last 2 weeks seem to suggest that now people are actively looking for the high beta ideas as well. Are you doing that? And the follow up to that is what's really happening in the banking space today, particularly the small size banks, wherein I think a lot of them have gotten excited over the prospects of the banking amendment bill and what lies ahead. How would you view that?
Yes, regarding your first question, we have always believed in having a balanced portfolio. Even when things were looking extremely bad, we thought there was merit in having a balanced portfolio in terms of having the right mix of defensive as well as some of these stocks which were beaten down. I think we continue to believe in the same. Increasingly, I would think if the markets were to do well over the next couple of years, you're right, there is a good possibility of the defensives taking a back seat after having outperformed quite significantly over the last couple of years, and the cyclicals to perform a little better. Yes, I think banking is a sector which has been in the focus over the last few months, last few weeks, and looks like this is a sector which will probably continue to outperform in the near term as well as the medium term. So we are positive on the banking sector in general, and I think if you're looking at the banking sector, it will have to be a lot more stock specific going forward in terms of the risk reward. There are certain banks which are, while they look almost I would say the risk in them from a fundamental perspective is reasonably low, but if you look at the valuations at which some of them are trading, I would assume there is a good possibility that some of the cheaper PSU banks could do better from a risk reward perspective over the next 12 to 24 months.
Would you be looking at PSU banks or the private banks which have largely run ahead of themselves?
As I said, you'll have to be very, very stock specific going forward. Some of the private banks are looking expensive, while there is opportunity in some of the private banks also. But if you were to kind of force me to pick between PSU banks and private banks from a 2-year perspective, my guess is PSU banks may probably deliver better returns going forward.
What's the call on some of the cyclicals? I know you painted them with a broad brush, talking about industrials and the high beta names, but essentially some of the auto stocks or some of the cap good majors, those really link to the investment cycle, not autos, but really power, capital goods, industrials. Would those be also good entry points at this point in time?
I would think so. I would think that this is a good time for people to nibble into these stocks. Yes, the environment is still not 100% conducive for these investments, but we have seen when the environment changes, how decently can these stocks run once the confidence comes back to the sector in general. So I would say, yeah, I would think so. I think it's a good time to start buying into some of these sectors, these sub-sectors that you mentioned, and probably be a little patient and take a slightly longer term call. If you are reasonable to kind of take a 12 to 24 month call, I think some of these stocks could do much better than what the markets would return over the next 24 months.
Where is the preference in autos? Two-wheelers, four-wheelers, commercial vehicles?
Four-wheelers. It's been like that for the last couple of years, and we would continue to stick with our call.
Okay, give us also your view on some of the oil and gas names, and the larger ones really, the index heavyweights. I could be a bit specific here in talking about the way Reliance has moved, or even for that matter, the kind of traction that ONGC has been showing recently. Cairn India for that being another example. What's the view on oil and gas?
Yeah, without getting into individual names, I think this is a sector which could do well. Again, this is one of those themes which have not worked for the last couple of years. The sector has generally underperformed. So given the evaluations and given that some of the things may be changing on a marginal basis, I would think the private names could do well going forward. We are more confident on the private sector names compared to the PSU names in this space.
Prashant, just before we let you go, very quickly, your top bet in terms of a sector that you'd bet on for the next 12 months?
Banking.
Sorry, did you say IT?
Banking.
Great.
Thanks.
Good having. Okay.
Yeah.
Okay, I got your point. But thank you so much, though, for sparing the time out and joining us and giving us your views. And of course, look forward to have you more often on the forum. Thanks so much for taking the time out.